Paying family members and paying kids can be another major tax strategy that can save you thousands of dollars in taxes. So I wanted to show you here with the IRS's website, family employees section here. You can go look this up. They even say one of the advantages of operating your own business is hiring family members. However, employment tax requirements for family employees may vary from those that apply to other employees. So here's some of the breakdowns. I want to go through it with you. Children employed by parents, payments for domestic work in the parent's private home are not subject to income tax withholding unless the payments are for domestic work in the parent's home. They are not subject to Social Security and Medicare taxes until the child reaches age 21, and they're not subject to federal unemployment tax until the child reaches age 21. Okay, so same thing if they're employed by a parent's sole proprietorship or a partnership in which each partner is a parent of the child, the payments for the services of the child are subject to income tax withholding, regardless of age. The payments for services of a child under the age of 18 are not subject to Social Security and Medicare taxes. And then same thing with the unemployment tax. So what I want to break down here is, and I'll bring up the section here. So this is this is section 3121 of the Internal Revenue Code, specifically section B3, services performed by a child under the age of 18 in the employ of his father or mother are not subject to tax. Okay, that's kind of what this whole section is about. So with this, that means that you can pay a child and they are subject to income tax, meaning federal and state taxes, right? They don't have to pay Social Security or Medicare taxes, which is generally 15.3% of what the wages are that you pay them. The key here is to pay them what the standard deduction is. If you can pay them what the standard deduction is, then you don't have to worry about income tax, the federal and state taxes. So here's the visual that I think will bring it all together here for us. So if you pay your kid $15,000, this is for, let's say, 2026, for example. You pay your child $15,000 for legitimate work in the business. We kept track of everything. We did everything we needed to. Here's how the numbers work. So if you're running it through an entity, through a separate entity, you pay them $15,000 in wages. Again, remember, you don't have to pay Social Security. You don't have to pay Medicare. And technically, you don't have to withhold income tax, federal and state taxes. Okay, so you make $100,000, let's say, you pay your kid $15,000. Your business income after that is 85 grand. Then you have all your other expenses. So you create that $15,000 deduction at a 24% tax bracket, for example. That's $3,600 in tax savings. The child takes the $15,000. It's in their bank account. Again, after it goes into their bank account, it really doesn't matter what you do with it. You could put it back into your account. You could invest into a Roth IRA for them. You could invest into a 529 plan. You could just put it in a savings account for them. You could purchase stuff out of their account. There's so many things that you could do. The standard deduction for 2026 is $16,100, meaning it offsets the 15 grand. They don't owe any taxes on that. That's why you can pay them up to the standard deduction. So you could pay them $16,100 in 2026. 2027, it'll go up. So the child doesn't owe any taxes. You save $3,600 in taxes. The child does not have to file a tax return because the income is zero after the standard deduction. So bottom line, you paid your child $15,000, you saved $3,600 based on a 24% tax bracket. Net cost to you is $14,000 or $11,400. But again, that's in your child's bank account. You can do whatever you want with that money. And here's a breakdown of some of the summaries here. So you have the deduction, the wages that the child earned. Again, there's no taxes owed or anything on the child side. You have a normal tax return that you have to file, and you get the $3,600 in tax savings. That's how it's broken down. Very simple, very straightforward. Again, there are some accounts that you want to be able to set up and establish. Again, this is for a sole proprietorship or a partnership. If you have an S corp, you'll have to establish a management company to pay the child to get out of paying Social Security and Medicare tax. If you have an S corp and try and pay your child, you will have to pay payroll tax, the Social Security and Medicare on that. So again, you want to make sure you have the right entities, the right structure in place to do this.